Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, November 2nd through Friday, November 6th, 2009. Well, as we get started on this Weekend Technical Analysis video, folks, I want to discuss a lot about what happened last week and then project into next week on a technical basis what the key levels you need to watch for and what it could mean going forward. Now, again, this is just a little bit of an insight into what we do in the Research Center, which includes 40-minute nightly videos and so forth. Everything listed under the Research Center is included. And by the way, the Hidden Gems will be released this Sunday night for Monday's trading day. And again, last month in 1 week ran 50%. We've had them run as much as 500% over the last 6 to 8 months. Unbelievable runs in the Hidden Gems, which again are monthly released and unknown stocks until we release them. And then people start to realize the value in these stocks. And I have a beautiful one that will be released this Sunday night. So again, folks, the market got slaughtered on Friday. It was a bloodbath any which way you talk about it. You can see the Dow was down about 250 points, NASDAQ down 52, S&P down about 30, really 2.5% across the board drop. And this is amazing because Friday's data and the movement in the market was directly inverse to what happened on Thursday. Thursday, we got a beautiful pop after Wednesday's debacle and the market got slammed down. Thursday, the market reverses, and then another reversal on Friday. Now, the key here is this. When you're talking about reversals, folks, when you have a reversal like we did on Friday, and I want to explain this because this is a very key signal in the markets that we follow, it's volume. Volume has been unbelievably key in this market, and the reason why we followed it is because every day up over the last 8 months has primarily been on light volume. What do we mean by light volume? Well, less than 200 million on the SPY, and again, the SPY is kind of a good gauge of the S&P and give you the volume numbers. But, for instance, Thursday's volume was under 200 million. All right, what it was an up day. Now, Friday, we had 325 million. See the difference? Under 200 million, over 325 million. That's a huge difference in volume and has to be respected. Now, to give you a good sense on that, well, let's go back earlier in the week. Well, if you go back to Thursday and Wednesday, these are both days, Wednesday and Tuesday right here, these are both days that were down. The market did more than 200 million. So any day that's more than 200 million seems to be a down day in the markets. Any up day seems to be less than 200 million. That's really the gauging point of how you know whether or not the market's up or down just by looking at the volume numbers. And what is that really telling you? That's telling you institutional participation. When the markets go up on less than 200 million, it's telling you there's not a lot of institutional participation on the buy side. When they go down, for instance, on Friday in 325 million shares traded on the SPY, it tells you there's huge institutional participation. And let's be honest, guys, Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, all the hedge funds out there, they're the ones that control the markets. And if they're selling and you have bigger volume, obviously on down days here, that's telling you that institutions are participating on the downside, and you have to say to yourself, what does that mean? Could that mean we're heading lower? And that's a good gauge of what could happen. Now, again, we had a huge sell-off day, so who knows what happens Monday. Maybe you get a pause down Monday, maybe a small bounce, maybe we continue to flush, and we'll go over the key levels that you need to look for in order to really sustain yourself and understand which way that's going to go. Now, again, I'll never reveal our key secrets that we give to the Research Center, guys. That's for the premium members of our service at $49.99 a month. And by the way, that includes everything listed under the Research Center. It's all included for that $49.99. Some people think, oh, you just get the Hidden Gems or you just get the nightly market report if you sign up for that, but everything is included, and that's why it's such a steal of a deal, because we're giving out everything. We give the kitchen sink out. It's all included. Okay, now again, folks, you can see the selling starting Friday. Look at the heavy volume. Look at these ugly candles down here. But look at this level right here. Now, I've gone over these levels even in these free videos briefly, but that was a master level at 104. So you can see how the market comes right down to the master level. Now, what were previous master levels? Well, previous master levels happened to be what I coined and nailed. And I tell you, folks, as a chief market strategist, along with a couple others here at this firm, we have nailed the top on this market 100 times over beautifully. Well, first of all, you can talk about the key level here, 109.68, 109.68, and that right there, folks, is the key thing in this market to watch for. 109.68 to 110.34 was the exact level which I coined as the Great Wall of China. And you can see that here on the 60-minute. Here's my 60-minute chart on the SPY, and this is right here. This is the top of the Great Wall of China and the bottom, and this is where we really were able to guide our subscribers to load up the shorts. And I said to them in the videos, in their premium videos, guys, I said, right at this line here at 109.68, that's your bottom of the Great Wall of China. If you get through that, the next spot will be to short, will be at 110.34 right up here. Well, guess what? Market hits this and bounces down beautifully right here. Comes back up, gets through it, but goes right to that second. And this was the whole Great Wall of China. And I'll just draw an X through it because you need to understand that it's the Great Wall of China right here. All right? bam, bam, Great Wall of China. Look at the market. Hit it, can't get through. Hit it, can't get through. Hit it again on the low side, and then starts to fall and cascade all the way down. And look at that Great Wall of China hold up. And again, that's just giving you an insight into the calculations and methodology that we use. And by the way, we don't just give guidance on this. We teach it, and that's the important thing. We're big believers in enlightening and avoiding the Wall Street hype and enlightening the average investor, swing trader, day trader out there to the coin, the games that are played with institutions. You have to know this stuff. You have to know these calculations and levels, and we're going to go over a lot of this stuff in the videos as we teach you guys, and that's really our goal. Is not only to give you the fish, but we want to teach you how to fish on your own so that you can be ahead of the curve, understand that you need to be ahead of the financial institutions like Goldman Sachs, or at least be on the right side, so when they're selling, you should be shorting or selling as well. You got to know that, folks. That is so important in this market because let's face it, trust me, Goldman Sachs doesn't lose. There's a reason why they reported better earnings and better profits than they ever have before, even in one of the worst recessions since the Great Depression. Trust me when I tell you that. They are on the right side of the market. Wherever the market is going to go, they're the ones pushing it that way. Understand that, learn it, and advise yourself on that fact. Okay. Let's go over a couple other odds and ends here, folks. Again, the Great Wall of China, but look at the bounces that's taken place. And this is another unique thing about this market, folks. As the market's fallen, the bounces are big, and they're big. I mean, look at Thursday's bounce. We had a bounce of almost basically 200 points on Thursday. Here it is right here on the 60-minute chart. But the key is that the bounces aren't seeing more upside. It's a one-day affair. And look at this happen here. It really started back when we hit the Great Wall of China on the first move up. Bounced up, pulled back, bounced up again, and then look how it couldn't go higher. It was literally that stopping point. And every time now you've had a down move, you've still had a bounce, but it hasn't been followed with any upside. In fact, it's been followed with more downside. Down we go again, and then we bounce again. Down we go again, then we go down again, and a big bounce. And do you guys see how all of a sudden that's a change in character in this market? How at first you had that upside where it would fall, but then you'd have 3 or 4, 5, 6, 7, 8, 9, sometimes 10 straight up days after that where it would just go back to back. Now you're seeing a bounce, but right away it reverses on that and comes all the way back in, and then you see more downside. So you really see that change in character in this market. Now projecting, guys, here's your Great Wall. This is your master level at 104. We did close below that. You close right on the support at 103.50. If you get through 103.50, you're going to go to 103 and then 102. 102 will be a master level as well to watch for. So watch that 102 level like a hawk on the 60-minute, on the 10-minute chart. It's been, again, 103.50 supports. So you close right on it. Could tell us that there's a little bit of support there. If you get through that 103 on the SPY, then 102, it will be the master level below that. On the upside, folks, 104 you did close below, but you never confirmed it. So we want to see on Monday, do we confirm the breakdown below the master level of 104? If you don't confirm it, it could tell us a bounce is going to come in, maybe take us back up to this key line right here at 104.50, 104.40. If you get through that, look at the 20 moving average, and then look at the necktie up here that's going to be forming of the 200 and the 50 moving average. And that's really what you're going to look for. Now, again, guys, some key stuff put out in the hot charts and alerts, which is included in the Research Center, along with the Pro Trader watch list. We've had a good run on the Pro Trader watch list of great calls there. Again, all off the Great Wall of China and expecting the markets to move down. And again, we'll give our pure and simple, outlook on the markets on the daily chart, on the weekly chart, on the monthly for those of you that are longer-term investors. But again, that's included in the Research Center for our premium guys. So join up there. The chat room's also fantastic. The webinar is coming up 2 weeks from today. That's another amazing thing you need to be aware of as we go over and teach our methodology and our key calculations and our cycle work and all this stuff. And remember, we look at stuff avoiding the Wall Street hype. We focus on the technicals of the market, but in our own way. All the other nonsense technicals, RSI, stochastics, MACD, nonsense. I don't even want to hear about it. What I do is calculations. What I do is pattern recognition. What I do is price, pattern, time. All that stuff is all you need. Learn to read this as a book, and you will begin to understand the language and basically have this as a book telling you what it's saying, and you can play it off that. Have a wonderful weekend, folks. We'll be back next week. See ya.